Okay, we're taking a look at the SPX, and I must remind everyone once again that everything we speak of is for educational purposes only and never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. I start here by just outlining with these big circles, the green circle versus the red circle. It looks like two different worlds altogether. There's a lot of continuity, tight trading going up here to the April high. Very consistent, a lot of continuity. But when you come over to this side on the drop, it looks like a whole different stock. And this is representative of the volatility that we're seeing and the moves that we're getting just virtually every day. It's just craziness. So where do we find ourselves right now? As I pointed out in the last week and a half to 2 weeks, I felt we were going to fall, and that's exactly what happened. It spent just a very brief period of time above the 200 simple moving average and then came back down below with a big day on Wednesday, down a spinning top on Thursday. And this looks to be like an inverted type hammer pattern, not classic by any way, shape, or form, because the wick is not long enough for the real body is too large, and low volume here. I have drawn an internal trend line here. You can see here we have some touches. It's pretty significant trend line, and if you extend this, that actually lines up with this swing low, and I think this is going to be the first test, and I do feel it's going to continue down. It might languish a bit at this level and form a bear flag and then continue to move down and test this level, and it's about 1058, 1055, somewhere in that neighborhood, which is going to line up with this trend line, and it could in fact test the top of this trend line. If it breaks there, then we're going to come down to the double bottom, and that bottom was put in May and June, and that's at 1040 to 1044. And then the swing low that occurred here in early July, and that was at 1010, 1011. If in fact we do come back up, which is not what I feel is going to happen, the first area that we need to concern ourselves with is the swing high here at 1100, which was put in mid-July. The recent high here at 1130, which lines up pretty consistently with the swing high from June. And then up here, the swing high at 1170 from May, and then at the top at 1220. The stochastics turned over dramatically. We're now in the oversold area, and the MACD crossed over the MACD line crossed over the signal line, and we have some building momentum with the histogram to the downside. So look for this to maybe stagnate just for a little bit and then come down and test right here, and then we'll just have to reevaluate what happens at that point. Again, I wanted to remind everybody here of the crossover, very significant event, the 50 simple moving crossover from above to below the 200 simple moving average. And it did in fact break down below the 50 here. On the Dow, I failed to mention it actually bounced off the 50 simple moving average. Here in the SPX, it actually broke down below, not significantly below, but below the 50 simple moving average. Okay, we're going to move over and take a look at the comp Q.